To discuss the economic implications in more details, we're joined in the studio by Dr. Salah Alhammadi, the president of the Arab Open University. Welcome, Dr. Hamadi. Thank you for joining us today.
Well, thank you for having me, and good evening to you and to our viewers.
Let's begin with our first question. How are the current regional tensions impacting the economic stability and investor confidence in Kuwait and the GCC as a whole?
Well, the current escalation impacting, well, if we take Kuwait, for example, now, and the GCC, yes, events will impact economic-wise. However, Kuwait and the GCC are well equipped. I think they have a very good economic reserve. They do have great sovereign wealth funds, foreign investors. However, in a classical way, if we look at the economic in a classical way, any events, not just a war, it could escalate even more. Any impact, like Corona, war, and sort of things like that, yes, it does. It has the short-term impact and a long-term impact. You know, it somehow it shakes the investor confidence. Yes, it will have some speculations. Yes, it might have vulnerable economic, you know, because, you know, the GCC, of course, most of their export is oil, and it goes through the Straits of Hormuz. And with the escalation like that, the closure of Strait of Hormuz can put an impact, not in an economic way, because, you know, we don't just invest in Kuwait or the GCC. We have foreign investors all over, like the sovereign wealth fund. So economically we are fine, but there is the residual of the economic, which is the supply chain, and it goes on and on, that we can, you know, discuss and take it one by one in terms of how it does affect economically the war itself. Because it's when you have import and export, so it does, you know, you export oil, and this is right now is very vulnerable because of the closure of Strait of Hormuz, and then the import, which is the supply chain that you bring through the ships, because now the ships cannot enter, they are lined up, and that again it could create more, I would say, the cost of transportation can go up, you know, insurance, it goes up. But on the other hand, we have, thanks God, the land transportation. Yes, we don't have train transportation, which makes it a lot easier than just, you know, trucks transportation, but it does somehow, I would say, it depends on the events of the news, how this will affect the economics day by day, because we are not here, we don't know how long the war is going to stay. And hopefully, may Allah bless us all, that will end up soon, and we go back to the normality and things goes well, inshallah.
But do you see this disruption as sort of pushing forward the creation of, let's say, the GCC railway to provide other routes?
Oh yes, definitely. Now the GCC, I mean, okay, the GCC itself, they do have the railway. Even in Kuwait, they have set the, you know, the platform for it. They have been negotiating with different international companies to, you know, set up the railway. But now you have to think even twice. It's nothing that you need now. It doesn't, I don't need it now. People think about, you know, 10, 15, 20 years from now, what's going to happen? I don't know. My only option is right now is land, air, and through the sea line. Air is closed.
Correct.
Now, so and the sea as well. So the only way I have is the land, and is only trucks, you know, shipments, which is, yes,
doesn't have a large capacity.
Doesn't have a large capacity like a train.
Yes. And
a train could be, you know, if you have a train, it would be a lot easier, a lot faster. I think the authority now, they have to really reconsider the shipments for the future. You know, you never know. I mean, we don't be pessimistic, but you need to put things in place. So either you need it now or not, but it doesn't, you know, the train or the railway, it's not there just only for wartime. It could be to reduce the cost of shipment.
True.
You know, so therefore I think yes, authority will reconsider to fast implementing the railway in this time.
Now, you mentioned just now we don't want to anticipate the worst, we don't expect the worst, but it would be wise to plan for the worst and hope for the best.
Yes.
Now we're noticing that Iran is trying to set up conditions for the use of the Strait of Hormuz. Let's say the war comes to a conclusion and Iran still wants to impose these conditions. How will this affect the GCC's relation with Iran in terms of using the Strait? As we've seen, it's already impacted it.
You know, it's the critical things about the Strait of Hormuz. You know, Strait of Hormuz, it has its geographic characteristic and politics characteristic. Yes, it's a narrow, it's a very small.
It's very shallow too.
Yes, and you know, passing, you're talking about 1/5 of the oil to the entire world is passing through there daily. So you're talking about 17 to 20 million barrels per day passes daily through there.
And for every day it doesn't, we're losing this oil.
So imagine line up now outside. That could increase a lot of things, as I mentioned. You know, increasing the shipment. I mean, the transportation costs, the insurance, a lot of things that it goes with it. But you know, the Strait of Hormuz itself, it doesn't belong. Of course, it's an international, you know, canal, and you know, imposing, you know, their force or their, you know, what they want to do with it, it will affect the oil prices. Think of now, just before the war, the oil price was around the 60s.
Correct. Yeah.
Now, today's the print is 105. That's just, you know, few days now. The oil, the Kuwaiti oil per barrel now, I believe the last I checked, is $153 per day, and that could increase $10 per day. Is that good or bad? Of course, it's not. You know, sustainable increase, gradual increase is good, but in a time like this is unexpected, vulnerable prices. It's not good at all because it will create inflation. Yes, it will bring more budget to the government.
True.
But it's going to cost more to the consumer later on because we import most of the stuff from outside. So if the things that we used to bring at, let's say, 5 KD, it's going to cost us now 10 KD.
20.
So therefore, the increase, it will worsen the inflation rate rather than bringing more budget to the government.
You think we'll have to see an international diplomatic effort to sort of end the tensions in the Strait of Hormuz?
Oh yes, definitely. I mean, the U.S. is trying hard to get the European to be involved, the NATO to get involved. You know, different Arab nation to get involved. You know, of course, each country has its own, you know, strategic politics, strategic, I should say. However, I'm sure because, you know, it's not only the oil, it's talking about the gas, that's more important to European at this point for their manufacture because, you know, Qatar by itself is supplying about 20% of the entire gas in the world by itself, without including Iran in that point. So therefore, the gasoline liquidity, or you know, liquid, it will increase, and that will cause a problem to the manufacturers that they're producing, where they have to look for another alternative. They might move to a different kind of energy. Yeah. So therefore, at that time, I think even there, the European will get involved because, yes, it's not, they might say it's not our war, but it's their interest.
Yes.
Because of the, you know, the closure of Strait of Hormuz, where the prices of the energies, either oil or gas, will inflate their economy, will stop their manufacture. We have seen a slowdown nowadays in the supply of chain because of the shipment, because of the energy supply.
Particularly the German industrial capacity. Since the loss of Russian gas, they've resorted to gas from
exactly,
and now that has been cut off.
Exactly. So I'm sure that, you know, their strategic reserve is not going to last long. So, you know, each country has a reserve that, let's say, how long it is going to last?
20, 30 days, up
exactly.
to maybe 100.
But it's not going to last long, so they have to keep it flow. And I'm sure they will reach either a diplomatic solution or by force to make sure that the Strait of Hormuz does not stay closed for a long period of time, because, as we mentioned, you know, 1/5 of the oil passes daily through there. Maybe it's not to, mostly is not to the U.S. because mostly it goes to Europe and mostly to Asia, but still, you know, that will affect, because, you know, not even, I mean, nowadays we have, I mean, the U.S. has manufacture all over. You should look at the iPhone now. iPhone, most of their production is in China.
Yes.
So also they have in India, but still not in the U.S., and that's where mostly we send our oil to. So therefore, they have to find a way, a solution, diplomatic solution, or by force or by military, whatever necessary will take. I don't think the Strait of Hormuz will stay closed for you know, too long. I'm sure this is not in the interest of anybody, not just the GCC, because we export that, but even the import people have to find a way to either, which is, I don't think they will have, to be honest. There is no quick solution. If I want to change the alternative, it's either I have gas or oil. There is no way to switch the manufacture right and change everything right on the spot.
Change your infrastructure,
yes.
Your energy infrastructure.
So, and that's going to cost them even more and more and more. And there is no alternative yet energy for them. So therefore, I think they are just, you know, their only solution is their reserve and finding another place to get supply. And who's supplying, you know, the GCC? They have, you know, the largest reserve for oil and gas in the world.
So you're saying that there's going to be a compounding domino effect from the closure?
Oh yes, definitely. It will be disaster if it's going to stay longer for the, especially for the industrial countries. For us in Kuwait, you know, we are economically we're stable. Mm-hmm. We're, you know, we're using, you know, thanks to Saudi Arabia, they have opened their land to us. We're using the air, we're using the land. Matter of fact, I was talking to my wife today, and she said that one of the store just received flour from Holland. So there is a continuation of you know, import, and we are not stopped there because there is our alternative. But if we're talking about an energy alternative for the industrial people or countries, then they have to find a quick solution to reopen the Strait of Hormuz.
You mentioned earlier about reserves being opened and used. We've seen the International Energy Agency, along with the U.S., let's just round it up to about 500 to 600 million barrels they had released. This was used to sort of calm the oil markets. We didn't see a calming of the market. There was a momentary pause, but then the prices started jumping up the very next day. Mm-hmm. So how much release from the reserves would you need to give yourself time?
Yeah, but I don't think there will be any, you know, as I mentioned, you know, the market is very sensitive nowadays. events like this, news like this, yes, I'm trying to ease. We have, probably the US will have Venezuela and their reserve to release to, cool the prices of oil and the gasoline prices in the US. But how long? Because you depend, as I said, the largest oil reserved in the world here in the GCC. So, giving the, yes, the US has a reserve. They have also Venezuela. They could be probably ease the escalation of the oil prices going up. But I don't think with the closure of Hormuz will be any stability in the prices of oil. It will be vulnerable. It will be, unexpected. So the prices every day, they don't know what's going to happen. Investors are, speculation to them, it's going to open or close. Any news, it could, hurt the market. And on the other hand, you're trying to ease the market. It's just like a lot of events where, for example, in 9/11, when the central bank trying to, they shut down the market, and the next day they came up with a 50 basis point cut down, where there is at that time is a lot to cool the market, but still the market was dropped big time because the event itself is bigger than easing. But of course you have to try. I mean, yes, the US will have to try different way to ease the prices, and that's a good way of doing it. Also, they're trying to, President Trump trying to, find a solution to the reopen of the Strait of Hormuz, because it's a very strategic, checkpoint for the entire world, not just for the GCC. As I mentioned, yes, we are, we import a lot of stuff, but we have an alternative through land. Export, yes, it will be affected, but, I think the industrial country will be affected more than the GCC economic itself.
Now, in terms of what Trump is saying and doing to try to calm the situation and basically to calm the markets down, we're seeing a lot of contradiction and a lot of changing of the goalposts from his end. Some reports say that he had planned for a few days, up to 4 to 5 weeks. Now we're seeing some reports say that the Pentagon is planning for a war until November. This lack of clear messaging, this is going to have more detrimental effects on energy markets, stock markets, global assets and commodities.
Definitely.
What can you tell us about those impacts?
Well, you see, this is what, unclear message. It makes speculation in the market, and speculation in the market is not good for the health of the market itself. So therefore, investors are moving away from stocks, maybe going to a place where more safer. So you will see that the market, a lot of reds in the market, pool. So therefore, the stock market, it will fluctuate on daily, I would say daily news, because
the hourly news too.
Yes. So we hope something. Like all investors are hoping, they are watching the news very closely to see how things reacted. Yes, it would not, even big investors, they will put things on hold. I would not build a high rise right now with this situation. So yes, investors will be hit. The stock market, yes, will be slowing down. This is the nature of, a crisis like this. Expectation of investors will be different. People will, react to the news accordingly. However, with experience, investors, they already know this is not the first time that the GCC is being escalated with a war and things like that. Just in June there was a hit. It wasn't like this because we were not hit by missiles and drones, but I don't think it would be worse than the invasion of Kuwait in 1990s, where the entire country is gone. However, I think the country has put in place a great reserve, so that's to destabilize the currency and as well as the money supply, where to control the inflation. You know, thanks God, everything is in place. We have enough strategic food supply and water, and the government has also maintained health care services, so we have enough medicine. As I mentioned, you know, still the supply comes through land, so there's no would be shortage.
So there's a good economic or financial buffer and contingency measures
definitely,
in place.
Yes.
Now, Doctor, what are the immediate reactions that we've seen across the financial markets in the Gulf? As, for example, Emirates real estate had fallen by about 1/3 because it's very tourist dependent. What can you tell us about the financial markets?
Well, yeah, the financial market, of course, will be in red for some time. Yes, it will be slowing down, which is the normal in a situation like this. And real estate as well will be slowing down. If I'm an investor, I'm not going to go buy, you know, apartment or a house, especially in a tourist area. I will, you know, delay my investment. And delay is based on the news. So as soon as they told me, I'm talking about in general, some risky investor, they will invest now because this to them is an opportunity.
True.
So I'm talking about here the normal investors, which is the majority, will have risk averse. So they will stop, you know, hold down on investment. Stock market will fluctuate. Yes, it will go down at some point. How long it will be going down, it depends on the news, daily news, hourly news, and that's, you know, and this is the business cycle. We never seen up all the way or down all the way. So there will be a business cycle, like Corona time. It will, it hit the floor and it went back up. So who is winning here is the long-term investors. So as a stock market, yes, it will slow down at some point, even though we have seen some green lights in the market, because most of the, you know, the annual reports and dividends has been done lately. But, you know, as I said, you know, investors will hold on their investment. Real estate will stop, will slow down. It will not, you know, stop completely, but it will be held at a slow pace because of the war, and this is very well expected. And I'm sure as soon as, you know, this war finishes, or at least you know, comes down, I think when people get used to it, it's just like right now is just the escalation of things. Is
it more the shock of the
war?
Oh
yeah, people. This is people are trying to absorb the shock. So in any war, you know, there is different kind of stages. So we are observing the shock because of the uncertainty. We don't know what's going to happen. We don't know when it's going to stop, how long it's going to go. We heard, yes, it will be long or short, but investors, you know, they have to be, or they are very careful in where to invest and how to invest and how much I should invest.
Doctor, we saw the Federal Reserve Chairman leave interest rates unchanged. What implications will that have with the current crisis taking place at the same time? Well,
they're trying to control inflation here, because they were increasing. If we see the past few months, there was an increase in the interest rate to you know, control inflation. And then they start deregulate, or, you know, reducing because they want to increase investment. But when you are in between, now oil prices jumped high, and that will lead to inflation later on. And we don't want to slow down investment, because the supply, supply chain manufacturer will stop if I increase the cost of borrowing.
Yes.
So therefore, I think the central bank is holding the stake right now in the middle, trying to observe what's going to happen, trying to push investors, at the same time controlling inflation. I think fiscal policy will jump in terms of, like in the U.S. has been touching base on their oil reserve, bringing oil from different places to control the oil prices. And, because oil prices are a major element in inflation. Mm-hmm. Because that's beyond it. It makes everything is, manufactured. Exactly. So therefore, the central bank will monitor the inflation and investment at the same time, and see what tools to use, or held down the interest rate, or increase it, or make it hold. Depends on the market, how is it treating itself.
Doctor, if the escalations continue to escalate, could the disruption in the Strait trigger a sustained surge in global prices, as you were mentioning earlier?
Yeah, definitely. I mean, right now, if the Strait of Hormuz, right now it's closed, so there's no oil passes. Yes, the smart way of the GCC, they do have reserve outside the Strait of Hormuz, but I would say for a month we would not have a disruption. But after that, if it stays continuously, then this will put a pressure on the production of oil, and that will increase tremendously the oil prices that we've never seen before, not even during wars like before, because the closure of the Straits of Hormuz, where the majority of oil prices, oil itself passes through there, not oil only, gases as well. And this by itself, I think it will have, as you mentioned, the dominoes effect, because not just the prices of oil, the prices of manufacturing, the prices of the insurance will go up.
Fertilizer.
Exactly. The supply itself, the manufacturer would, unemployment will increase, because if the manufacturer is closed, there's no job. Yeah, exactly. So things will be deteriorating. Economic condition will be worsened a bit until, the market. The good things about the market is it corrects itself. Mm-hmm. Like, Adam Smith, he said, even if you leave the market itself, because it's a global business cycle. So it goes down and then gradually will fix itself. Even without the Keynesian, when they said no, the government should step in and fix, at least to speed up the correction.
Adam Smith would argue to leave it to its own nature, its own devices, will find its floor, eventually come up and find its ceiling, and keep this sort of natural balance between the two.
Sure, yes.
So let's say the Strait of Hormuz does open, but now there's a question of the petrodollar. If countries agree to sell oil in the yuan or the ruble, let's say, what does that do for America's might in terms of its petrodollar?
Well, I don't think, to be honest, they will. Even here, there's an agreement back in the 70s to sell the oil in dollars. So
with Henry Kissinger, I believe, was able to get
so
this.
In terms to go ahead and change that, I believe it's not going to change anytime soon, especially in the GCC. Well, not Kuwait. Kuwait has the currency basket, where I'm using dollars, but in, let's say, in the GCC, they're using the dollar peg, where their currency is attached to the dollar itself. So it's not their interest to sell in different currency. unless they have to.
So it would take an enormous amount of pressure to shift away from
exactly, because it's not only for the U.S., it's only for our own economy. Because if I depend on the dollar itself in my reserve, so I want things to be sold in dollars because I use it for my foreign investment, and I use it for my basket to deregulate my currency. So therefore, changing to a different currency at this point is not an easy step to take, because you will deal with the currency devaluation.
Okay.
And that could be a lot. If we're talking about percentage-wise, it'd be more than switching between a dollar to a different currency. So, and that's why even if I sell it to China, they have to buy the dollar from the market and give it to me, and that the appreciation of the dollars, even though that dollars in the 70s was stopped being backed by gold. What was a temporarily, now is forever. But
a permanent shift.
But it's still, it doesn't need to be backed by gold anymore, because it's backed by the legitimacy of the government and the power of the U.S. And nowadays, everybody wants the dollar to either to buy oil or to have a reserve in their currency as a in the central bank.
But now we're seeing a sort of challenge or a questioning to the legitimacy of the government and its use of its dollar in terms of geopolitical negotiations and deal making.
To be honest, it is way beyond the negotiation, because even if you transfer money now to any currency, it doesn't go, it goes to a dollar, from a dollar to that, so it's still, the dollar is dominant. I don't think the dollar will be any negotiable to be switched anytime soon, no matter what the tension is, because I have set my economy based on the bulk of it, dollars mixed with gold now. Then we go back and look, the gold is backed by what? By dollars. So therefore, we make a loop and then we come back to the dollar. And the dollar is, I think, is the where a saver haven, or I should say, at this point. So yes, there is alternative. There is the euro. There is the pound, British pound, and all that in there. China's coming, yuan in the way, Japan in the yen. But still, I think collectively all these against the dollar, yes, but not
one
anytime.
By one.
Yeah, no.
Would you say this rigidity in the system based on the dollar is more of a weakness or a strength outside of the current crisis that is now being posed?
Well, I think when back in 1942, or 44, when Brentwood Agreement was done, the entire countries agreed. There was 40-some countries in that meeting, New Hampshire, I believe. They agreed that to use the dollar as the currency backed the gold, and any central bank wanted to exchange the gold, they will, they bring the dollar and they give him the gold, or bring the gold and they give him the dollar, whatever. So I think since then, the building escalation of the permit of the dollar to be strong since then. And then the dollar is, as I mentioned, is, you needed to sell the oil, the most energy wanted nowadays with the gasoline. Central bank, their I should say most precious currency is dollar, not even gold. Yes, gold is safe. Is there and all that, and the prices of gold I needed when there is escalation, I put it there. But
it's traded through the dollar.
Yeah, so traded to the dollar. So you still, the dollar, I think, with the strong of the U.S., been dominating the, politics, economics, the largest economy. U.S. GDP, you're talking about 25, 26 trillion a year. So it's a huge amount of, one company in the U.S., talking about one of the largest company is entire
country's GDP.
Yeah, exactly. I mean, Nvidia.
Yeah.
How much is their budget? Talking about 4 trillion.
And now it's leading the market.
Exactly. So, you're talking about enormous numbers. So, I believe when we talking about a different kind of currency at this stage, it's just, I don't see it's going to happen. It's not impossible, but it's very difficult, especially with there's no close alternative to the dollar as a single currency.
Doctor, could you tell us how resilient the GCC economies are today compared to previous crises while we're facing this current one?
Well, I think the GCC economy now is more resilient based on previous experience that they gained. They have seen crises like that, and they put in place a very good reserve that will stabilize the economy. The GCC has worked great on their sovereign fund, and they've been investing all over the world, not just in a single place that they used to. For example, in Kuwait now, the sovereign fund, I believe, is more than 600% of their GDP, which is very good, very stable. And if we look at the history, the sovereign fund itself has helped Kuwait during the war with Iraq in 1990s, and there was no production of oil.
Could you explain how the Sovereign Wealth Fund serves as a buffer?
This is an international investor. The Kuwaiti Sovereign Fund is the first sovereign fund ever. It was created even before the liberation of independence of Kuwait. It was built in 1952.
Yes.
So therefore, the investment, they do have lots of assets, investing here and there, different countries, and being as a buffer is like, to make it easier for the normal viewer, it's just like you have one account here, or you have many accounts all over the world. So if my account here frozen, then I do have other account to use. Let's say I do have an account in UK, and I go to the UK. When I travel, I use that account. So it's easier, and I not just to use it to drain it, but there is an income, sustainable income that comes from not only oil, but as a diverse, from the oil itself. So here the country is trying to diverse its income by making their sovereign fund stronger, giving it more, of course, just like when you do the budgeting every year, there's, the 10% goes here, the 10% goes there, and, in the budget, and that investment, future funds, future generation, and they put into the sovereign fund. And if we look at the sovereign fund, not just for Kuwait, but look at, for example, Norwich, China. China by itself is, they have a great UAE, Saudi Arabia, Kuwait. They're trying to, yes, we have an investment. There is an opportunity in the foreign sectors that they're trying to utilize. And I think Kuwait has done very great job in utilizing the sovereign fund and making it as an additional income, additional buffer in case I need it. Hopefully we don't need it anytime soon, but it's there, and it's being managed very well by the government.
Doctor, what can you tell us about inflation trends in the upcoming weeks, given the disruption in the energy supply market?
Well, inflation is, the issue with inflation is unexpected, because if the inflation is controlled, every year we have expectation of inflation, 3%, 4%, 5%, whatever, the range that I expected. So if I expected, I usually manage my budget through the inflation rate. However, with the unexpected or uncertainty because of the closure of Strait of Hormuz and the oil prices going up, there is two ways. Of course, yes, we will have more income through the increase of the oil prices. However, on the other hand, inflation as well, it will be undetermined and unexpected, because if I receive the oil, each company or each manufacturer has its own budgeting as well. So if I have, my budget that I will produce, let's say, 1,000 cars that it's going to cost me X amount of dollars. Now it's going to cost me double X of. So therefore, I'm not going to sell it to you at the same price. So yes, inflation will be escalated, depends on how long this will persist. However, I believe the central bank would not stay just watching. They will do and use their tools to sort of ease the inflation and not affect the investment as well, because they have tools to slow down the economy, but you don't want to slow down the economy when there is no
movement or
exactly. So you are between two things: inflation, slow of and that doesn't go together. Usually inflation comes because of faster production, too much production, or the increases of oil prices. But at the same time will bring, if you slow the inflation down, that will also slow down the investment and create increase the unemployment.
So it's a very delicate balancing act.
Yeah. Very, very delicate, and I'm sure the central bank, they use their tools to ease the inflation itself.
So would you say there's sort of a perfect storm being brewed right now, given the current crisis?
Oh yes. As I mentioned, inflation is unexpected. As long as our confidence stay calm, like right now, the government has done a great job on easing the public confidence, telling them that we have frozen the prices. You go to the supermarket, everything is there. There's no shortage. Prices is the same. How long this will be, it depends on the confidence that we receive. The same thing with the international. However, the difference is that the international they depends also on the oil prices and how long that oil prices will persist at that price. Stable prices, no problem.
It's perfectly fine.
Perfectly fine. Even if it's 150, but as long as I know it's going to cost me 100,
yes,
it's not going to fluctuate, because unexpected, the uncertainty, that's the issue. And that's the issue with inflation, because on uncertainty.
Now, sir, how might the inflation trends affect our supply lines? You mentioned that if inflation were to increase, the price of oil increases, now manufacturing costs increases.
Yeah, it will affect, of course, our supply chain, because, here, yes, the government has its own power to give you the confidence, but again, we import most of our stuff. 90% of our stuff is being imported. So, and even if we have manufacture here, we do have to import the raw material. The raw material, again, will be higher. So therefore, yes, oil price will benefit the public budgeting. We will have more income. But that doesn't mean I'm going to spend more, because, that increase in the budget itself is uncertain, as we mentioned. If it's not steady or stable, or sustainable, then
there's room for error.
Exactly. So therefore, in terms of the supply chain, yes, it will affect us because, when we bring even the raw material from outside, this will increase, and like if I am a merchant, and I usually bring something from outside, remanufacture it here as well. I'm not saying just bring a commodity from outside and resell it here.
Yeah.
I'm not talking even about that. I'm talking about, let's say I bring raw material, build it here in Kuwait. That raw material now, it's going to cost me more, not just because the raw material, it costs them more because of the oil price. Costing the transportation cost is higher, the insurance it's higher, so I received it much higher now. If I used to, if it's used to cost me, let's say this chair used to cost me 10 KD to build it here in Kuwait, because I brought this from this country, brought this from that country, whatever. Now it's going to cost me a lot. For
the same product.
Exactly for the same product. We're not talking about labor increase. We're talking about raw material has been increased on me because of these chains, of all these increases in the supply of chain.
And this comes back to that domino effect we
exactly.
were talking about earlier.
Yeah.
Now, beyond the region, actually, let's stay with the region. Do you find this to be an opportunity for the Gulf nations to sort of unify greater as a bloc, to protect themselves, offer more of a buffer economically?
Well, I think the GCC has already established on making a bigger buffer economically, because if we see how, this is not the first war that they have experienced. We have seen before, not just a war, but events like this, coronas, a lot of, not necessarily only in the region. Things could be, like in Corona time, the entire China is shut down, where we bring a lot of things from there. So therefore, not necessarily this region is being escalated now. So I think the GCC has put in place, and they've been talking about before even the making the economy more stronger. They have built a greater reserve. They have, as we mentioned, their sovereign funds is even bigger now. They invest more in it. Trying to make their economics not depends only on oil. If we see the last few years, the budgeting of the GDP, how the oil revenue or income from oil has been reduced. If we see like UAE has been tremendously working on that. And one of the Kuwaiti, the new Vision 2035 is to reduce the dependence on oil in their income.
To work to diversify.
Diversify, exactly, yes.
Now, could you, I know you've touched on this a little bit throughout our interview, but could you give us the short, medium, and long-term outlook of the current global energy markets?
Well, if we look at the short term right now, with the with the closure of Strait of Hormuz, right now we are just watching what's going to happen. Yes, we know that it's been closed. The international coalition are trying to put an end to that, either diplomatic or by force, and it will, has to be reopened somehow. In the short terms, oil prices will jump. Yes, we've seen that already. Medium terms, we'll see a supply chain again. It will be affected because, right now, anything comes through the sea line has been stopped, not just the oil. Other than the oils, there's no supply yet. Yes, there is alternative. So therefore, I think oil prices in the short terms supply chain in the midterm, long term, which is I don't think will stay a longer term, but we will see the inflation. If it stay longer, we will see definitely inflation, because that's the nature of the market. No matter how powerful you are, still, the consumer confidence.
You're subject to the forces.
Subject to the forces, yeah, exactly. So,
speaking on inflation, how long of a long term would that need to be? 1 month, 2 to 3 months, maybe?
Inflation, inflation, it all depends on, if we look at the history of inflation, if we look at after the World War I in Germany, it took a longer period of time. Look at Mexico, look at all these, it takes a long time. If we look at Nigeria, it took some, month to control it, because if it's uncontrolled, then it could take forever. But I don't think inflation will be that long, because it's just like, I think this is we call it seasonal inflation.
Okay.
So it depends because of the situation now. As soon as the Strait of Hormuz open and we stabilize the consumer, confidence, ships where they can go back and forth early times, in short terms, prices will be frozen. And then if things goes well, like, war is fine. I'm talking about now economics, economy. The prices will be frozen, and then gradually with time it will be, because it's seasonal. The inflation, the reason for the inflation is the oil price. So if the oil price comes down, inflation definitely will come with it. Yes, it's just like inflation didn't directly rise with the oil prices. It took time to reach it. So when it comes down, it will take a little bit after the oil prices, but it's not going to escalate. It will be held at a certain point.
Now that you've brought up a best case scenario, could you tell us, in your opinion, what is the best case scenario for this, and what is a worst case scenario?
Well, best case scenario is to put, the Strait of Hormuz reopen. De-escalation of the war has been mild and put on hold. There will be an agreement between Iran, U.S. To sit on a table to discuss diplomatic solution. Let's face it. Yes, we have a superpower, which is the U.S. and its coalition. And then we have Iran on the other hand. Our issue, I don't want to say our problem, but our issue is that we are neighboring with Iran. So they will be there. We will be there, and you will be hit, whatever, and all that. I'm sorry to say, but best case scenario, there will be events where there will be negotiation to sit on a table. Of course, U.S. superpower, they're not gonna compromise.
They won't take this lightly.
Yes, they will push for either obey our terms. And if that happens, then we will see that the Strait of Hormuz will reopen, prices will put on hold, the export of oil will come in, manufacturer will reopen, work again. We will see the terms will ease more and more and more. That's the best, which is going back to normality, we should say. That's the best, because we were at a best stage. Where the budgeting, we had it at 50. We
were managing
for and the oil barrel was at 60. So that's, to us, is the normality. Going to 70, it's great to us, but nowadays is 150, which is unexpected.
It's historic. That's currently the highest price.
Exactly. Worst case scenario, I think when escalation is continue. inflation get higher and higher, weaker supply chain, big manufacturing trying to find an alternative supply of oil. They have to find it different somewhere else. It's not going to be the same price because it'll be a lot more expensive to them. We will, of course, as any nation, we will feel the price escalation. This affect, of course, economy in a bad wartime, and this is, not outrageous. This is the expected. That's the event of a war.
Yes.
Event of a war, things like that, and that's the business cycle. Because when you put forces outside the market, it affects the market somehow, pressure the market, and it goes, right, left, whatever. That's very expected. So I think, but time will heal because the problem with the market is the event. The event of the war is there.
Okay.
So we absorbed it. Now, what could be worsened? Continuation of the war it would be, nobody wants it, but we absorb the big news.
Mm-hmm.
Now the daily news comes in. That's what affect the daily market.
Would you say we have to sort of accept the reality and then move on from there? Or
Well,
to sort of
you don't have to just accept the reality. I mean, the reality is there. No matter what, you either like it or not, because we are not the decision maker in the market to deal with the inflation, because inflation, nobody owns the inflation. Mm-hmm. Is the confidence in the market who owns it? No one, not even the U.S. can. The U.S. itself has inflation.
It's trying to deal with
exactly.
Inflation.
So worst case scenario, inflation will rise, oil prices will rise, it will be shortage in supply chain, but life will go on. Nothing will stop.
Hopefully we'll find out soon that things calm down in the short term.
Inshallah, Allah يسهل وعيدكم مبارك وإن شاء الله الله يفكنا من هالحرب
the
crisis and all that. Yes.
Well, Doctor, I'd just like to thank you again for sharing your time and your insights during this difficult situation. Thank you for coming into the studio to have this interview with us, sir.
Well, thank you for having me, and thank you.
Ladies and gentlemen, that was Dr. Salah Alhammadi, the president of Arab Open University, and we'll continue our live coverage, but after this short break.
قوة الإطفاء